Welcome back to Mortgage 101, your guide to home ownership with Clinton Wilkins and myself, Todd Veinotte. We talked a lot about monetary fiscal policy from the government and the Bank of Canada. And I guess to just kind of wrap that up, to finalize what we were talking about, your feelings are basically how might that impact the market when all is said and done, projecting out over the next number of months?
Mm-hmm. You know, I think there's already been some softening in Ontario. I'm sure our friends that are listening in Ottawa might be able to speak to that. You know, there's some properties that are even, may have purchase agreements on them right now that the valuations are coming in a couple $100,000 below what the consumer has made an offer on. So that's certainly concerning. In BC, I think things are soft as well. Yeah. We are not feeling that here in Atlantic Canada. And I think part of the reason is our real estate is still very, very affordable compared to the rest of the country. The average home price for a detached home here in Halifax is about $500,000, which is still some of the most affordable real estate from across this country. Will a higher interest rate impact Canadians? Yes, it will. Obviously, the amount of money that you're putting out every month to service the debt, that's going up. Yeah. But will it retract on what's going on in the real estate market here in Halifax? I'm not convinced yet. I think it's going to be a wait and see. I think we need a lot more supply in the marketplace before we get into more of a balanced market. And the market's just been so crazy. Even pre-pandemic, it was still very, very busy. So wait and see. One last thing I want to say about rates. Mm-hmm. Might come up again. I love talking about rates. Friends don't let friends take a fixed rate, Todd. So, if you're in a variable, stay the course. If you're going to go and get a new mortgage, take the variable rate. You will thank me later.
And one of the big pluses is obviously, like you said, if you had to sell the property, it's only 3 months.
It's only 3 months interest to get out. Yeah. It will be lower. You will weather a storm over the next 12 to 18 months, and the rate will go up. But it will then likely go down, especially if we get into like a recession type situation. Okay. So stay the course.
Okay, I wanted to kind of get into the inflation conversation and how that impacts or might impact somebody when they're determining or when you're determining what they can borrow. Because the old sliding scale, I guess, has changed a lot with a lot of these variables when it comes to costs, fuel, on and on it goes. Are underwriters considering that right now?
Like the cost of everything else outside of the house?
Well, right. So I guess, for example, when you looked at somebody's a year ago, exact same budget and all of that stuff, things cost so much more now.
Yeah.
So is that considered at the underwriting process?
It hasn't caught up yet, Todd. Really what we look at when we are qualifying someone is we look at what their monthly costs are to service their debt. So that's one thing. Mm-hmm. And we look at the operating costs for the property. So we look at what the property taxes are, and there is a heat calculation, and then we need to obviously qualify people on either the stress test with the qualifying rate or the contract rate plus 2%, which is ever higher. So as the property taxes go up, Todd, that's going to have an impact. Yeah. If people take on more debt, that's going to have an impact. But do we look at things like consumer goods and fuel prices and stuff like that? No.
But to me, if I'm a lender, that should be a consideration, should it not?
Yeah, and I think in some instances, some lenders will allow some more extended debt servicing ratios. There are some banks, some of the big five, that have policies specifically for bigger markets, and they'll allow a higher debt servicing kind of ratio than they might in smaller markets. Will they retract on some of that? It's really going to depend on what happens with the risk. If people continue to pay their bills and they're not having losses, lenders are in the business of lending people money. You know what I mean? So although they don't want to take undue risk and obviously, put the bottom line at, jeopardy, they will take enough risk within the risk tolerance to still be doing business.
Okay. When it comes to reconstruction or construction loans or all of that component of it. Mm-hmm. How difficult is that when it comes to, because we know it back to inflation, it's unpredictable what you're going to pay for materials.
Yeah, and
even a few months down the road.
Yeah, we talked a little bit about this a few months ago. We talked about, what does a contractor draw type mortgage look like, a self-build versus a turnkey.
Right.
Obviously, we know turnkeys are a lot safer right now, Todd. Yeah. We don't personally do draw financing here in this office anymore. It's too risky for the appetite that, we're really able to take on. And there's too many variables. You're 100% right. There's a lot of challenge even with contractor builds right now. We're getting new agreements that have some very special clauses in there. It talks about things like inflation, the cost of materials, and they're talking about overruns. And there are some provisions in some of these contracts that I'm seeing that the borrower has to pay up to X number of dollars for any overages. Mm-hmm. And I think that's going to become more the norm than the exception. As we know, over the last couple of years, the cost of materials have really gone up. We're going to see an increased cost in labor likely, Todd.
Yep.
And just imagine if you were a contractor and you went into an agreement with a consumer, but then your costs go up significantly, somebody has to eat that.
Yeah.
Either it's coming out of the bottom line of the contractor or the buyer has to pay some more money. So we're going to see some of these provisions. And, it really kind of protects both sides. We had a news story here a couple months ago where a contractor basically just went AWOL on 4 homes.
Yeah.
Part of the reason was obviously the cost of construction went way up, but the values of those homes went up significantly compared to when they made those agreements. So essentially they could resell those homes for almost double what they were in the agreements for. Mm-hmm. So I feel for both sides. Obviously we do business with contractors every day, and obviously we do business with people who are buying new home construction. Challenges on both sides of the table. And I think it's a risky time for anyone that's in construction, and I think it's a risky time for anyone buying a new home construction. Honestly, there's a lot more knowns when it comes to a resale home. Yeah, it's not brand new, but somebody else worked out all the problems probably, and you have a solid product. Not all new home construction is challenging, and not all new construction is a walk in the park. But, there's pros and cons to buying a new home versus a resale home, and there's pros and cons from buying a resale home compared to a new construction. So I think you really need to weigh the pros and cons and make an educated decision on, what type of real estate you're going to buy when you're going to buy a home.
So when it comes to, I guess, the amount of new construction that's going on, is that impacted by what's happening? What's your take on?
Well, we certainly need a lot of it.
Yeah.
Here in this market.
We need a ton of it.
We need a ton of it.
Yeah.
So, I think we're certainly fast tracking some lots. The municipality here in Halifax has fast tracked, I think, up 20,000 building lots. Mm-hmm. So there's going to be a lot of construction over the next couple of years, which we do need. We need real estate at all levels.
Yeah.
It's not just single family detached homes that we need. We need apartments, we need condos, we need townhomes, we need all types of real estate here in Halifax to really keep up with the demand. Mm-hmm. And, the more real estate that we can get into the market, we'll move maybe more towards a balanced market, which right now we're not quite in. It's still obviously so much a seller's market. And I do feel for everyone who's buying new homes, but I can tell you there's a lot more real estate on the market today, Todd, than there was even a couple weeks ago.
Wow.
I don't know if you've seen it, but there's a ton of listings, and I think some of the listings are not moving. I saw a listing in Dartmouth that went up. Probably they put it low. They put it on a program is what they call it. And they were expecting a ton of offers, and they didn't get any. Uh-huh. Took it off, relisted it for a couple $100,000 more than what they had it listed at the first time, and still not getting any action. So borrowers ask me all the time, and I'm not a realtor. I'm never going to be a realtor. But my opinion is when you were selling real estate, list it for what you want to get and what you think it's worth.
Yeah.
And if you get a little bit above, cool.
Yeah.
I think these days of getting like hundreds of thousands of dollars over what it's listed for are probably like in the past.
Like only a few months ago that was happening.
I know, but it's not good for anybody.
Well, it's good for the person selling.
It's good for the person selling, but guess what? They had it listed way below what the market value was probably.
Yeah.
If they're getting hundreds of thousands of dollars over. Yeah. I think listing real estate at a more realistic price is going to help rebalance the market a little bit as well. It really sets the expectation for the seller and for the buyer.
Yeah. So these big, huge construction builds that we're seeing with the cranes all around, they're all around HRM. I'm sure Ottawa's got something similar, maybe not to the same degree, but certainly new builds going on. A lot of those are condos, are they?
I would say a lot of them are actually rental apartments.
Rental apartments, but there would be some for purchase units in there with it.
There certainly are some condo projects on the go right now.
Yeah.
I would say they are the minority of the constructions that are going on. Most of the constructions that's happening around the city right now is rental stock. And our rentals we have about a 1% vacancy here in Halifax. So obviously a high demand, not only to buy a home, but also like rent a home. Yeah. So we certainly need a lot more rentals here as well. And I think, obviously getting that type of real estate on board as well is going to help with the market. People need a place to live. If people are still going to migrate to Halifax and Atlantic Canada, they need to have a place to lay their head at night.
Is condo purchasing, I guess is what I was getting at, is that a different animal when it comes to lending?
It certainly is a different animal. Not every lender likes condos. I can tell you a lot of new construction condos do not come with new home warranty, which can be a concern for lenders. Some of the condos are very, very small square footage, which can also be a concern. Sometimes they are worried about things like resale. Yeah. If there's a lot of pros about condos, how much your operating expense is going to be. Yeah. Most of the things that pop up in a condo are being covered by your condo fee. Right. So, there's pros and cons to every type of real estate. Is the condo market as hot as the freehold market? So like a detached home? Yeah. No. Will it ever be? I don't know yet. Halifax, I think, is very new in the condo space. Yeah. And, I think it's kind of a growing market. In other bigger cities, condos are kind of the norm. Here, we certainly have a lot of condos, but not as many maybe as some other markets. And I think it's not quite as desirable to live in a condo. It's not sexy. Everybody wants a single family detached home. Yeah. Nova Scotia, you think you can just be a cat, you can have a huge swath of land. Obviously, there's less and less land available. So I think we're going to see more condos in the years to come, if I was a betting man. Yeah, for sure. But they can be problematic for a lender. Some lenders may be a bit reticent to... Yeah, they can be problematic for the lender. Yeah. If the condo isn't well managed, they might not like the estoppel of the condo. Maybe if the finances aren't good with the condo. Maybe there's some construction issues with the condo. Yeah. There certainly have been some condos here in Halifax that have had special assessments. And guess what? The people who own those condos, they have to write a check. Yeah. And they need to cover, any of those like unforeseen costs. All right, we've got another segment left. Mortgage 101, your guide to home ownership. We will be right back.